Hey there, everybody. How are we doing today? I'm Connie Foote with Foote Title Group, where we protect your home ownership and make sure your home closing is a smooth, simple process and easy to understand because there's so much going on there. Welcome to Coffee with Connie. What I try to do a couple of times each week is to bring you some information that's valuable, that helps you either if you're looking to buy or sell some real estate, if you know somebody who is looking to buy or sell some real estate. So to provide you with some information if you're doing it in the future, so you know where to go for the resources that you need to get the good information. Hey there, my good friend. Thank you so much. Thanks for always tuning in too. I really appreciate it. So first of all, let me say, if you are on with us live, please check in and say, hey, I love to know who's on with us because it helps me tailor the messages so I understand the audience that we're talking to. Also, if you're tuning in on the replay, thank you so much for your time as well. And let me know that you're on. I really appreciate knowing that you pay attention, knowing that you get good value out of what we're doing, and it helps me formulate what we're going to do going forward as far as providing information for you. So thank you all so very much for taking your time to tune in. I've heard from so many people recently about information that we've provided, and I really, really appreciate you taking the time to do that. The other thing is if you find what we're talking about interesting, helpful, you know somebody that might be interested in it, please share. You sharing is caring about somebody else. There's no way that I can talk to everybody on the planet, although I would love to, about some of the things that I know, or to be able to try to help answer some questions or find the information for people without your help. So I don't always know all of the people that you know to be able to share the information with. So please help me by sharing the information that we provide to you if you feel that it's useful. I really appreciate that. And also, if you click the follow button, you won't miss any one of our live broadcasts. So thank you again. I really appreciate your time. Today, I thought I'd talk a little bit about different types of mortgages. And I am not a mortgage professional, and I do not know all the details about mortgages. So what I want to do is to provide you with some thoughts, some starting off points. And then if you have questions, then you can direct them to me, and then I'll get you to some professionals that know what they're doing. Hey, Jeff, how are you? Hey, Katrina, how are you? I hope your family's doing okay. Really, my heart breaks for you guys. Hey, Sharon, how are you today? I love that beautiful baby and those pictures that you share. Thanks so much for sharing those with everybody. He is precious. So, as I said, I am not a mortgage professional, but Jeff, as you can see, is. Hello. And he is really a very good mortgage professional that is very well versed in all of the different things that are available and is very passionate about helping you make sure that things are taken care of correctly. So one of the things that I want to do is not to try to be that person that knows everything, but I want to try to be a resource to help you get the information, to get to the right tools that you need. And I want you to just start thinking about the options that might be out there, whether it's mortgages, whether it's real estate, all of those types of things. I want to just put out there, I don't know everything, but I have been in this industry for a long time, so I know a lot of good professionals to work with, and I know a little bit of the jumping off points to give you something to think about. So today I thought I'd just talk about a couple of really basic different ways that you can finance that dream home that you want to buy, especially with the interest rates being a little more volatile than they were maybe 6 months ago. So, or even I think a month or two ago. So they've changed a little bit. The interest rates are still fantastic compared to where they've been over the past 20 years. But I know that things, having a different interest rate, being able to get a lower interest rate allows you to buy more home and allows you to be a little more flexible on what you want to look for. So I thought I'm going to just talk about 3 basic kinds of things right now. Does Jeff have the ability to finance in Virginia? I think he does. Jeff, let's, hopefully you are still watching and you can answer that question for Sharon. Sharon's a really good friend of mine from a long time ago, and I'm pretty sure she's probably looking for her daughter. So awesome. Well, then you guys can message each other, and I can actually connect you when we're done if you can't get to each other through our Facebook Live. See, this is what the wonderful things are, answering questions and connecting people. So thank you guys for tuning in and sharing with everybody. So awesome. So what I wanted to talk about today is just a few different types of mortgage options that are available. Obviously, there is a plethora of information, and a mortgage professional like Jeff or several other that we work with can certainly help you and would love to help you, and I would trust these individuals to help you get to the right path. So a couple I just wanted to talk about today, which are some basic things. There's an adjustable rate mortgage. There's a buy down, which I think more happens in the building community. And then there's a balloon loan. So all of these may sound a little scary because they have some adjustment or change features in them, but what they do is allow you, when the interest rates are higher, to start out with a lower interest rate to potentially be able to buy a little bit more home, or to make that payment a little more affordable until your life circumstances change a little bit. So it gives you the option to be able to look at some different things that are out there. The option for just a standard flat rate mortgage is not the only thing that's available out there. So when you're looking at, wow, this is what the interest rates are right now, maybe I can't afford to buy because I can't buy what I want to buy because the interest rates are going up. That's absolutely not true. There are so many different options. And so those three that I just wanted to touch on, which are some kind of generic things, and there's a lot more creative things out there that can help you in different ways. But I don't want you to be scared of these different adjustable or reduced interest rate mortgages, because they can change a little bit, because they're designed to help you as your family and your life and your work circumstances change, to grow into what you can afford and make sure that you're capable of making those mortgage payments, because everybody wants to make sure that what you're buying you can afford for as long as you choose to live there. So that's why working with a really good mortgage professional is very important, because they take all of your information together and look at that information. And then from there, they actually help you determine what types of things are available for you to be able to buy the most for your dollars, and to make sure that you're comfortable. So adjustable rate mortgages are exactly what they say. Usually it's a mortgage that has a feature in it where you can start at a lower interest rate, and as the term of the loan goes through, the 20 years, 30 years, 15 years, whatever you choose, the interest rate can change. And it's tied to what's happening in the economy, but there are some caps that say you can't go higher than this or it can't go lower than this. But what it allows you to do is stay at a lower interest rate. Sometimes it's and Jeff can speak better to this, but sometimes it starts at maybe 0.5% or a whole percent lower, and then over a term of 3 to 5 years, maybe it may increase. Well, he has a 10-year ARM, which is really competitive too, which is really great. And look at those great rates. So, and it typically changes within, okay. So he obviously has a really competitive adjustable rate mortgage. And so what we're saying here is, don't be afraid of the options to take these mortgages that may change over a period of time, because what that does is give you the ability to pay at a lower rate when maybe your income is a little bit different than it may be in 5 to 7 years or 7 to 10 years. So that's a really good option. Some of them change quickly, maybe over a year. Some of them change maybe in 5 years. Some of them maybe don't make that first change until 10 years. So there's lots of different options, as you can see. But what I want to encourage you is, if you are concerned about the interest rates increasing, there are different options to make that comfortable and work for you, and to allow you to buy the home that you want. Two of the others that come to mind, a lot of times when people buy through a builder, a buy down is an option where a builder may put some money aside. So they offer some closing costs for you, and then they'll actually set some of that closing cost aside with your mortgage lender to assist your payments, and in effect reducing that monthly mortgage payment for you. So the interest rate is a little bit lower that you're paying, because they're actually pulling a little bit out of a savings pot to add to your payment. And sometimes that's traditional with a builder situation, because builders tend to offer large chunks of money for closing costs that can be used a lot of different ways. So if you're working with a mortgage professional that has knowledge of different types of loans that could help you in the circumstances that you're looking for, then you know that this is available, and they can help you determine how is best to use those closing costs to your advantage. One of the things that I really think is a great idea, and I'm sure, hey Lisa, how are you? Congratulations on that upcoming new addition to your family. Really excited for you guys. So one of the things that the professionals that happen to get on our live with you can help you with, or that I can help you find someone that can do, is talk to a mortgage professional before you even start looking, because you want to do a little research and find somebody that you want to work with that can help you navigate through some of these different options that are available. That way, when you go to look at a new home, doing a new construction home, or building a new home, or buying a home from someone else, then you know that there's some of these different options available, and you know a little bit better what you can afford. So a buy down, I think you can use it as any type of loan situation, but typically it's in a builder situation because it's they take some of the closing costs and set it aside to help assist you with those payments. The other one that I wanted to talk about that's just really simple again, and as you can see, because Jeff tuned in and gave us some good information, is there's so many options out there. But the other one I wanted to talk about is a balloon loan, and they don't happen that often because people are a little uncomfortable with it. But what a balloon loan does is allow you to buy a piece of property or a home at a little bit lower interest rate than what the current market value of a fixed rate mortgage would be, but the loan will be due. They will calculate your payments as if the loan is happening for 30 years, but you're actually only going to make those payments for 7 to 10 years, maybe 15 years. And I think there's a lot of different options with that as well when that balloon happens. But what's going to happen is that loan is, the payment is calculated for a 30-year term, so it's affordable for you. But at the end of the balloon period, which may be 7 years, 10 years, 20 years, there's a lot of different options out there, then the whole balance of the loan will be due. Now, it sounds a little scary, but think about it. If you're in a situation where maybe you're a military person buying a piece of property in an area that you don't plan on being in that long, maybe you want to try to get that little bit lower interest rate, and you're going to be paying off that mortgage before that balloon would come available, or would become due. So my point in having this conversation, Jeff is saying, is typically a second mortgage. Okay, then there's some different options as well. So the nice thing about this conversation is, first of all, you understand that just because the interest rates that are published right now, which are the fixed rate mortgages, maybe are what's happening most frequently, there are so many options. There's things to help you with closing costs. There's loans that can help you get a lower interest rate. There's loans that can do a graduated interest rate over a certain period of time. There are different options as far as closing costs, whether a builder's paying them or a seller's paying some closing costs for you. Those are some options to get those interest rates down, because ultimately the interest rate, getting that interest rate down, is what allows you to buy more home, because your payment goes down. So the less you're paying to borrow that money, the more you can afford to borrow to buy whatever that dream home happens to be. So obviously, as you guys can see, there was a lot of engagement with a mortgage professional. Thank you so much, Jeff, for being on. I really appreciate that. And Jeff is a wonderful, wonderful professional that is very passionate about what he does. And we've worked with him for a long time. He obviously does work in Maryland and Virginia, and I'm not sure in other areas, but you certainly can message him through this stream. If you have other questions, and remember, as I said, I don't profess to know all of the answers to all of the questions, but I want to be the resource to help you get to some professionals that can get you the right information, or I can find that information for you. I had a really good friend call me last night about a friend of theirs that's looking for a rental. They didn't want to buy something, so she was looking for a referral, because she knows that I have a lot of connections through the real estate community because I've been doing it. I don't do rentals, and I don't know that much about them, but I do know where to find the people that can do that. I don't do mortgages, but I do know a lot of professionals that do a fantastic job and would take amazing care of you, just like Jeff. And so that is why I take the time to go through this, because I want to help you get good information. I want you to make good decisions, and I want you to get good information. So remember three things when you're looking to buy a piece of real estate, whether it's buy a new home, whether it is to buy a piece of property to build on, whether it is buying from a builder, whether it is buying a brand new home or a home from another person, there's three things you really need to remember. You need to do your research and find a realtor, not only a good realtor that maybe someone else recommended that has great reviews, but you need to interview them and make sure that they work with you. Not everybody's personality is the same and not everybody works well together. The same is true with a mortgage professional. I want you to do some research and find a mortgage professional that works with you. There are a lot of fantastic mortgage professionals out there, but again, you're going to give them all of your financial information and you want to make sure it's somebody that you feel comfortable with, that you can work well with, because this is a big deal. And thirdly, and a lot of people don't understand this, but I want you to do your research and choose a closing company that is going to protect your interest. Because a couple of things we do is, one, we make sure that all the pieces are pulled together correctly. Two, we do research on the ownership of that property that you're going to buy to make sure that you won't have any problems with it. And ultimately, at the end, what we do is we protect your home ownership by ensuring that no one can come back and take that dream home that you've worked so hard to buy from you at a later point when everybody else is gone and moved on. That insurance will still cover you. FHA just dropped the monthly MIP. That's exactly correct, and I did talk about that on Tuesday, so that'll give you some amazing savings as well. Jeff's talking about, if you go back and look at our Coffee with Connie on Tuesday, it will tell you a little bit about that, or Jeff, or any of the mortgage professionals that you may want to work with that are very good about this, about their job and know all the up and coming information. Will be able to help you with that. But if you're going to get a loan that's a lower down payment loan because you're maybe a first-time home buyer, don't have a lot of cash to put in, maybe moving up on a smaller level, and you're going to be doing an FHA mortgage, that drop is huge and is going to make you be able to afford more homes. So thank you so much, Jeff. I really appreciate that. So make sure that you do your research. Find those three professionals that are very important to this transaction for you, and hopefully we helped you with a little bit of information today. That is my passion, and my mission is to make sure that everyone on the planet understands what the title company brings to the table, because it is so very crucial at the end of the day when everybody else goes home, that your home and yourself are protected. Your own home ownership is protected. La, 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 sorry. Hope you guys are having an awesome day. We've talked just for a second about the new year, and I hope you guys are having a really successful start to your new year. I've asked you about what your word is for the new year. I want to know what you're going to do this year. What is that word that's going to keep driving you to do what you do? Mine is execute, and we started the year by executing in a huge fashion. We launched our new website, which our goal was to get it off the first of the year, and it absolutely happened at the last minute. Please go check out our website, www.footetitlegroup.com. There is resources for buyers, for sellers, for realtors and lenders. There's links to all kinds of different information that you may need. There's all kinds of resources, guides, checklists, but most importantly, and one of the huge things we're really excited about, is there's a closing cost calculator that is very comprehensive. So you can get in there, log in, save information, go back in, change information. Realtors and lenders can do loan estimates. They can save it. They can email it to their customers. If you're thinking about buying something, you can get in there and update information once you get in there and create an account and save it. So, and creating an account is not a way for us to spam you or overwhelm you with information. It allows you to keep getting in and out and saving information if you're looking at different things. So go in and check out our website. We are super excited about it. Stay tuned for all the other things we are executing throughout the year. You will just be amazed at all the things we have coming up. Every month we have something new going on, and we are working really hard on our February execute. So I hope you guys are having an amazing day. I really look forward to talking to you every Tuesday and Thursday between 8 and 9 at Coffee with Connie. And thanks so much for tuning in. Please share if you found our information valuable, and I look forward to talking to you again soon. I'm Connie Foote with Foote Title Group, where we protect your home ownership. Have a great day, everybody.